Hi everyone, welcome to Layman's channel. Today we shall be discussing support and resistance for beginners, right? Now, as you already know, trading support and resistance is one of the best ways for beginners to trade and understand the forex market. Now, I'm going to go straight to discussing how best you can trade this support and resistance. Now, it's very important that as a beginner, before you trade, you always make sure that you have two windows open, at least two windows, right? You have the larger time frame and the hourly time frame. Now, if you look at my chart, right, you'll notice that I have my two windows open. I have the 4-hour chart and the 1-hour chart, right? Now, if you look again, you notice I have my dotted lines. These lines are my period separators. Always have your period separators on. This will guide you so that you don't trade at odd hours where you have high cost, high spread, right? This will cost you. Now, when you have done that, always again make sure that you don't trade against your larger time frame, as you already know. So the reason why your larger time frame is always above is to help you understand what's happening in the market. Like if you look at the higher time frame now, right? If you look at the higher time frame now, you will notice an uptrend. Okay, you will notice an uptrend. Now it will be foolish for you to take these opportunities, because most people, they try to create opportunities in their head, right? Now the reason why this is likely going to end in a fail is because your higher time frame is a sell and is a buy, and you are taking your sell signals. These signals are mostly false signals. You will likely be, your stop loss would likely be hit, right? So avoid these things. This is the reason why you always have your larger time frame above. Okay, now to trade your support and resistance, you have to make sure that you pair your dynamic supports, right? So I categorize support as two types. There might be different types based on your research, but what you have here on the larger time frame, for instance, is what we call I call it dynamic support and resistance, right? Because it's moving. Do you understand? It's moving, right? Now let's look for what I call the regular support and resistance. Forgive me if I'm not using the popular terms that everyone uses. Now if you look at the hourly charts, this is what I call the regular support and resistance line. These ones are horizontal, right? Like it's very clear that these areas are areas of support, these areas are areas of resistance, right? So always make sure that you consider these two things. Don't just trade one, because you might wait a long time before you see opportunities to trade, right? So always trade the regular support and my dynamic support and resistance. Now let's find an opportunity where we can trade support and resistance. Now if you look at my early charts, you notice that it's very noisy, right? Now on MT4 and most of the scaling softwares, they are scaled, right? So sometimes you have to zoom out to make it look clearer, and but when you zoom out, you notice that they are too tiny. It will make no sense, right? And when you zoom in, you begin to notice that it's overly stretched. So it's always important, when you have two windows open, you have to enlarge one window so that you can perfectly see what's happening. Now so this is my early chart. Make sure that you've already checked your higher time frame to ensure that you're not entering the wrong trade. Okay, so let's find a good opportunity for us to trade support and resistance. This is a historical chart. Forgive me, this is a weekend. Today is Saturday, so the market is closed. Let's use this, right? This is a nice setup here, right? Now personally, I'm a day trader, right? I don't how will I put it, I don't wait for the 4-hour setup that you have more pips, right? I think the pips you get from your early chart is good enough, right? So let's look at what's happening here. This is about 141 pips. Remember I told you that to get the number of pips from your MT4 here, you just put one decimal from the last digit on the right. That's how you get your, so instead of having 1414 here, you put a decimal after your last digit, it becomes 141 pips, right? So from this point here down to where I'm dropping my snap to, we have 129.9 pips, right? Now let's find another setup. This is already used. Let me use another one as an example. Now let's say you find your chart somewhere here, right? And you're looking at this point as your area of support, and you want to take advantage of this. Maybe you want to buy, your signal says you should buy, right? So what you should do is you should critically look at this. This has formed one, let me use the word, it has formed one high here, right? Now for you to trade this, you have to wait for it. You have to wait for the market to form this high, which you already marked, and form another higher lows, right? At this point, that's when you now mark this point also, and then you wait for the third one. Always wait for the third one, don't take the second one, right? Now if you should move our chart now, you notice that it marked these points, right? It marked this point here. So remember, you have established one of your higher highs here and one of your higher lows here, right? The first one is this. Now ordinarily, if you should take this trade, you discover that you're going to be now if you buy at this point, you're going to be stopped out. Why? Because look at your price action. Okay, this is why I want you to understand something in trading support and resistance, right? Price action is inevitable. It's very, very important. Whatever strategy you are using in the forex market as a beginner, the first thing you should understand is price action. What's happening in the market? Okay, now if you look at the candles that led to this very point, they are all bearish candles, right? Now let me clear our chart so that you see it very well. Now look at it. You notice that we have lots of traders here, right? And even when you go to this area of interest, look at what the buyers were doing. The buyers were too few. Okay, so make sure you don't set your order and leave it. If you are trading dynamic support and resistance, even if you are trading a normal resistance, don't set your orders. And that's why this is suitable for day traders, because once you notice your price is coming to your area of interest, you have to look at your chart. When you set orders, sometimes you miss the price action that leads to your points of interest, and most times you will be out of that trade. Okay, now this is a bad signal for us. Okay, it shows that there are too many sellers at this point. Okay, now what you're still going to do is you are still going to take advantage of this point, right? That's why I always call it point of interest. There are three things that can happen at this point of interest. It's either the market goes your way, when you respect price action and everything tallies, right, you can take your buy. But when the price action is not on your favor, you know that area will likely be broken. Okay, now when the area is broken, there's another strategy that you use to enter your trade. Now let me draw my trend line so that you understand what I'm saying. Okay, so okay, so this is your first point, right? You mark your second point here. Now when you are drawing your trend lines, let me show you how you draw your trend lines, because support and resistance is not a line thing, it's a region thing, right? It's an area. Now you look at your candles. Okay, you go to your you move your wick to the area of your candle that you have, that the candle body forms, right? Then you now put a second line again to the end of your wick. Okay, sorry, 1 second. okay, right? Then you also mark the ends here, all right? Now the area within these two lines is your area of interest, right? Is your support or your resistance area. Now this is for the support line. Let me draw the resistance line now. Same way as you drew this, you get to your first point, okay, where you have your first higher high, which is at this point. Now if you notice what is happening now, this is interesting. Now if you notice the diagram of these lines I'm drawing, you automatically know that this whole thing is a false signal. Now it's very important for us to always recognize our formations, okay, so that you don't just enter your trade. Now for you to take a dynamic support and resistance trade, you have to understand the structure of that market. Now if you look at this line, it goes against our regular dynamic support and resistance, which is supposed to be something like this, right? For a market that is uptrend, this is how it's supposed to be. But instead of having that, we are having this, right? This is not a dynamic support and resistance. This is just a market moving upward, right? It has not established any higher high or higher lows. My eyes are just deceiving me. So it's very important to recognize the structure. It must become smaller at the top. The higher you go, the slimmer the lines should be, okay, like this. Because you know at some point you are going to run out, because the market will not trend up forever. At this point it will become slimmer, and that is when you will be expecting the market to start going down. So it must be wider at the base and slimmer at the top. But what we have here, we have an equilinear. If not, it's even getting wider at the top, right? So this is a false signal. This kind of trade should never be taken, because you end up running at a loss. All right, this is false signal. Don't take such trade. We'll find a better structure now. Okay, so right now we have another formation. So now we have an area where we obviously notice that the market just broke this this low, right, by coming lower, right? So now you are expecting a dynamic support and resistance, and now this is a downtrend, right, a bearish market. Now you want to sell, you have to draw your support lines and mark your points of interest. Now to do that, let's look at the market and say, okay, the first point here is this, which was the breaking point, right? The second one was this high, which was not up to this one here, which is obviously a good structure. Now what you are expecting is some form of support here, right, which is happening currently, but it's lower than your previous low, right? So now for you to sell, you have to wait for the next higher low, right? The next higher low, which should be somewhere around this point. Sorry, I'm drawing on my screen, right? So we are expecting this point here, this point. We are expecting, based on our market structure, we are expecting this point here to be our points of interest, where we'll take our sell. Now let's clear this and draw our dynamic support and resistance line, right? Now you mark your first point, right? This. Also note that you have your wicks to mark. So that is your area of our resistance. Now let's draw the area of support also. You start from here, right? This is where it started breaking. You have to draw another that includes the body, okay? So like I told you, in between the lines, in between the two lines are your areas of interest. Now if you move this market, you notice that these lines, they continue, okay? They continue coming down, as well as sorry, I've moved this line that I'm not supposed to move. Alright, let me just use this, okay? Alright, okay. So if you notice, this is a perfect dynamic line. You see it narrowing down, right? So your next point of interest, like we mentioned, is somewhere here. Now if you look at price action, you notice that the buyers are not much and it's respecting your dynamic resistant line, okay? So what you do is you set your you take your order at this point, okay? You take your order at this point where your price goes in between. The moment you find it here, that is when you take your sell, okay? Now where you are going to put your stop, always respect the previous point, right? Like the previous high was here, okay? Make sure your stop loss does not go above this area, right? But you give an allowance of maybe 5 pips to create that allowance, because if your price is going to break, right, it might break this area for a while, right? It might even try to test this area, but if it ends up breaking this area, then you know the structure has been broken, right? It shouldn't go above this area here, okay? So when you notice it didn't go above, even though the wick went up, the seller still took control of the market, and that's how you got your pip. So from this you can take about 90 pips, right? Don't forget to always put your stop loss at the lower dynamic line, okay? Always take your profit at this point. Also, a very important point of note is when your price breaks your structure, and this right here, this right here, it's that point right here. If you look at what has happened in the market, you notice that the price already broke our structure at this point, okay? It broke our structure, and now it's trying to test it again. Your dynamic support and resistance lines are very powerful, right? They are very, very strong lines, okay? Now once your price breaks your dynamic points of support and resistance, you are expecting that the support will become resistance and the resistance will become support, right? Now in this case, since it has broken the support and you've taken your profit, note that this line is going to be an immediate line of resistance, okay? It's no longer a line of support. Now this happens a lot of time in the market, and for us to have a dynamic setup, it does not really come often, so you have to take advantage of these three situations, right? So that you always see opportunities that you can trade. Now once your price has broken your structure this way, right, note that this line is going to be very powerful, right? So always be careful and pay attention and wait till it tests this line, and wait for the price action to confirm. And the price action here is your first bearish wick, which is a strong one, That's your signal, and that is when you should go into that trade. The number of pips that you should set, I think it should be equivalent to your previous take profit, right? The previous take profit we did here was about 90 pips, so set your 90 pips also at this point, okay? Then your stop loss should be somewhere here. Like I told you earlier, it should be at the previous point, okay? The previous point of resistance based on this line is this points right here, these points, right? So your stop loss should be somewhere here. Remember, 5 pips allowance, okay? I don't know why my lines today are so thick on this chart. I'm trying to make it slimmer and it's becoming very difficult. Okay, so if your market, you have this structure, right? Note that if it breaks this structure, you are expecting a downtrend that is going to give you at least the length of this, okay? And also, if your dynamic support and resistance is broken at this point, right, and your market closes at this point, note that your next movement is going to be targeted at this point here, okay? So you can cash on this this number of pips. Trust me, I've done the back test more than 100. I've traded this, and I can tell you for sure that this always work. Though not 100%, but 90% of the time it will always work. And also at this point, right, once it closes below, note you are going to go down, almost equivalent of this number of pip. Now the reason why I'm using just this is because it's not always easy spotting this setup, right? Most of the setup you see, once you are able to use your 2 dynamic lines and mark your regions, right, you discover that most of the signals you see on the market, they are false signals. They don't really tally, okay? They don't really tally. Now, okay, look at this. Even if you're going to set up on the trade like this, right, this area here, that is broken, right, you notice the market is still playing around in this area. It will hit your stop loss. Why? Because there's something wrong about your setup here, right? Because if you are to properly use your dynamic support lines plotted the right way, you discover that at this first point of interest, right, you mark at this point, right, you put the second one, to mark only the higher points, right? Make sure they all respect the different areas, okay? Now you also do the same for this. It goes this way, then you mark this last points, okay? So now look at our charts, look at the dynamic line we plotted. This is wrong. If you should enter this trade at this point, in fact, avoid this kind of setup, right? Once you enter all of this because you want to trade, you'll discover that you'll just be raking in losses. Make sure your trend lines are plotted well. Now let's find an opportunity for the normal support and resistance. Now the regular support and resistance always happen after maybe a trending market, right? Like from what you can see here, we just had a downtrend, okay? So now this point where it was broken, right, is your first point that you mark for your normal support and resistance. You wait for it to establish. Now it has established a point here, right? Now this second point here should be almost the same as this, which it is, right? Your next point of interest is this, right? So for normal support and resistance, you can start trading from this. You just need to confirm these two, right? You just need to confirm these two. Once you have three, one in the middle and the other two in opposite direction, you can take this point here becomes your next point of interest, right? Because you now draw your support and resistance lines from here. Note that your support and resistance line should be 2, just like dynamic that we had. It should be 2 between the two bodies, and also between the wicks, right? This is the highest point here, right? Okay, this is where the body stops for the most part of it, and this is the last part of your wick, right? So you see that this whole area here is your area of interest, right? This whole area here is your area of interest. This is where you buy or sell, right? And you pray because you need prayer and everything, and you pray the market respects your decision. Most times it will respect it. If you do your plotting right, it will always respect it. For the normal support and resistance, once it's broken, that's it. There's no other advantage to it, right? And that's why it's always better when you have your proper dynamic chart. It's one of the best things that can happen to you. Okay guys, I've spoken for a while now. Sorry, the quality of this tutorial is not that smooth. I've been off for a while. Okay, I'm trying to freshen up my skills again, and I'll give you more of this. All right, bye, take care, and trade well.